The Hedgeless Horseman here. It's June 13th, at least here in Sweden. First of all, thanks to the sponsors, markets. Very volatile day. Funny thing, I mean, gold is pretty much a pure monetary metal. Silver is in between, a hybrid of industrial and monetary metal, and copper is an industrial metal. And they all kind of almost traded exactly the same. While they both or all three of them spiked and almost got back to the same levels where they spiked from, which again just shows how much chaos it is in the short term. I mean, they went up and fell back on the CPI numbers. So the funny thing is, like, okay, CPI numbers gets released, everything goes higher. Well, these three metals and a bunch of other metals, I bet. And who knows, the dollar probably reacted, yada yada yada. And then it's like, not too long after, suddenly there was no change. So then it's like, well, what is it? Was there, absolutely no change? Why did it react so much here? Like it was a change, yada yada yada. But it's like in the short term, markets are kind of pure chaos. And I mean, today it felt pretty nice. I around the market open, I went to the gym. Didn't check the metals, came back, started doing some work, and so like all of a sudden, oh wow, I haven't looked at the metals, even though I've been at the computer for like last 4 or 5 hours. Just that is like, I gotta tell you, it feels great. Really feels great, because the more you watch something, the more you focus on something, the more you think it's important. That's just how it is. That's why, in a way, I don't even know if there's a net benefit with Twitter for most investors, because everybody and their mother is short-term focused, and most people are traders. So I mean, if you're constantly exposed, as we are, if we're on Twitter, if we're constantly exposed to short-term thinking, trading, guessing where the metals are gonna go, people throwing out there, oh, I wouldn't buy juniors here, wait for whatever. Oh, I would buy juniors here, wait for whatever, yada yada yada. And like always, almost nobody really has a clue. Almost nobody beats the market. So if that's true, if like 1 in 20 actually beats an index, and then we're talking like the regular stock market, let alone the most volatile sector there is. In that case, like, 95% of people's opinion, not that they mean anything bad by it, and I've said this before, but basically everyone almost every comment that says, one should do this, one should do that, this is going to happen, there's no working strategy behind it. Almost all opinions on Twitter are de facto worthless, I'm sad to say. It's like I do a lot of memeing, I do a lot of like stay patient, a lot of that stuff, because most of the time most days you should really do no trading. If you're a value investor, you basically value shuffle if there's volatility, meaning that, a company I like went down, and another company I like equally as much didn't go down. If I'm fully invested, I can sell some of the thing that didn't go down and buy some of the stuff that went down. The portfolio went down on paper, or if you had only those two stocks, your portfolio would be down on paper, but the expected returns of the actual portfolio is higher because you're now a bit more weighted into something that you think has higher expected returns in the future. So I mean, that's the thing with, there's a saying about bear markets, like the big money is actually made in the bear market. It's just that you can't see it at the time, and that's 100% true. Would actually be interesting to look at some. Take Magna, for example. Let's say you were, I think Magna has basically been chronically undervalued through its entire existence. It's probably the cheapest it's ever been now, I think. Yes, price is up, but a lot of news has come as well. They're fully permitted now at Green Hill, so that's obviously a very big thing. And I know usually, or what I see in a lot of stocks is that people say, let's say Magna goes up on good news, like really good news. Like, okay, risk-adjusted value for Magna went up, I don't know, 100, 200%, then it's already selling at a third of what the value already was. Stock goes up. And then you often see people like, I don't want to buy now. I should have bought when it was cheaper. If it's riskier and worth less here, it becomes it goes up in value and price goes up. My point is that it might be cheaper here than it was here. Because I've seen some people brag about, I bought stock X at Y price, 6 months ago or something. And the stock is up 150%. So they're trying to say how smart they are, obviously, because they are up on the stock. And sometimes it's a stock where I'm like, well, actually, 6 months ago at lower prices, that was not in my opinion, that was not a good buy. There were too many risks, whatever. It's like, I think it's a better buy after it's up 150%. But that's the whole point. You can kind of quickly figure out who gets it or who even thinks about value and who does not. Because most people just look at the chart and say, I want it cheaper. Cheaper. Well, you're talking price. Cheap. If you think something is cheap, that by default means you have an estimation of what the value is. Right? That goes without saying, but still people say cheap or expensive while looking at what the stock price has done. And going back to, money's made in the bear or whatever. I think Magna's been super cheap all this time. Maybe it was actually a bit cheaper here than it is up here. Maybe slightly, maybe a higher risk, but higher risk, but maybe a bit higher reward. Still, anybody who was buying down into this, I actually did that. When I was buying all the way up, and then I reshuffled a bit. I think I bought all the way to the top. Then nickel crashed and all that. I found some other opportunities, but I went back to net buying again around here, and I added for the family portfolios as well because it was super cheap, and since the price went down, my position size went down. Meaning it's if I increase my shareholdings, since the position size goes down, that means I'm getting more diversified in a sense. Because if up here, for example, I don't remember exactly what one portfolio's position of Magna was, maybe 20-25%. That's obviously extremely concentrated. So diversifying just for the sake of sanity makes sense. But then when the when the position size shrinks, you can afford to add, especially if you think it's a better case. Let's say you had 10% of Magna here. You do nothing with position. It goes down here. Let's say it's down to 6%. But now you think the case is much better. So I should have 12%, whatever. More than here, actually. Then you would have to double your share count. And that could make perfect sense. But the point is that at the time, it didn't look smart at all. For the longest time, just averaging down since, I mean, now for example, we're at 0.77. So imagine you start averaging down from here, if you didn't own the stock. Yeah, that's almost a year of getting pissed in the face by Mr. Market. The Mr. Market telling you how stupid you are. Paper losses get bigger and bigger, especially if you add as well. So it's like you don't only are losing money on paper on the stock you already had, but most buys. I mean, down here, every single buy would be at a negative return. Fast forward, all of a sudden, that dip buying looks really smart. I was like, okay, yeah, I mean, we know in hindsight anybody can invest perfectly. And everybody typically says, oh, I should have bought more at the lows. But how easy is it to do that when the chart, let's say, looks like this? It's not easy. And that's why my point has typically been that unless you can stomach looking stupid, having big paper losses for a long period of time, I don't think you have a chance in this sector. I mean, I did a tweet. Well, first of all, in a volatile sector, the dip buyer is king. I'm trying to find what tweet I did. Yeah, here. Like poker, I would never advise anyone to get into junior minors. The volatility alone crushes most people, but it's a glorious feat of mental strength if one is able to endure it. And I really mean that. When I was playing poker, what people saw was like, wow, you can play online poker from home and make money. Because I was quite good at it. So they're like, oh, you got to teach me. A lot of people was like, you got to teach me. I didn't want to teach anyone because I know how much it takes. I know how stressful it is, and I know how much it takes. And I know what kind of I mean, it's kind of the same, I think, with investing. I think it's like 1 in 20 actually makes money on poker. So I mean, that goes without saying. Oh, you're gonna have, or it's gonna be worth it maybe if you're 1 in 20. If you're the other 19, you're gonna be losing money. Okay, well that's not worth it. If you're the 1 in 20 that actually makes money playing poker, you're still gonna have typically a lot of stress. And there's no, like in investing, you can buy, let's say you buy a good management team. The case is simple. I'm going to give these guys 2 years to create value. I think I bought it at a cheap level. They have a long pipeline of growth, or they have a whatever. Pretty simple case. Fire and forget. Theoretically, you could just buy it now, wait 2 years. And if you're right, you're probably going to be up a lot. In between, you didn't have to do anything. In poker, there is no such thing as time off. If you're not actively playing, you're not making a cent. If you are playing, you're constantly under pressure and stress. You need to play. You need to be alert, focused, and you can't afford to go on tilt. And you have to take big hits sometimes when you're like 95% favorite in a huge pot. It goes against you, and who knows, maybe 3 days worth of profits just evaporate. That is not fun or easy. Takes a huge amount of energy. It's like I was multi-tabling. If you played poker for like 1-2 hours, I mean, yeah, you kind of got drained. Or investing, most days I do absolutely nothing. I do no trading. I do due diligence. I think about stocks. I think about stocks all the time. But I couldn't go on a vacation, and it's like if I wasn't playing poker actively, I wasn't making any money. In investing, when for some reason, when I'm on vacation, typically my portfolio does well. Typically, I don't trade when I'm on vacation. I don't know if it's the direct causation, but probably doesn't hurt that you're hands off. You can't buy high and you can't sell low if you're not trading, right? You can't be shaken out. You can't get FOMO, etc., etc. But again, at the time, it's like take the Magna form now. Now everybody's talking. The form was kind of dead around these levels. The case hasn't really changed. Price has gone up. The case has become more de-risked. The company's gone up in value. But nobody was interested in touching here. And I'm going to get to that here with a... back to the point maybe that's like... If someone... I mean, I've been basically obsessed with junior miners now since 2015. Well, it feels weird. 2015, late 2015. So that's like 9 years. 9 years, and I still think I'm learning. I try to learn every day. I try to get better all the time. I still make a lot of mistakes. There's always something to tinker. I find, I try to watch a lot of investing videos. I mean, Rick Rule and all of that, and theory craft, a lot of theory crafting, constantly thinking about cases and relative cases. Because I see so many buys out there. There's so many stocks I think are really good bets, but I can't own them all. And some you might think are so good, it's like, oh, I want 10-15% of my portfolio in this stock. Well, if you find a few of those and you take big positions, it quickly eats away your liquidity, or what you can put in the portfolio. So that's the good and bad. That's a luxury problem, really. I think there's so many buys. Just the copper poppers video I recently did. I think all of them are cheap. I think all of them are undervalued by Mr. Market. I think Mr. Market is too pessimistic on all of them. And I don't think the market is rational. It's just that when you translate that, it looks like pessimism in the sense of chance of success, whereas I think the simple reason is simply that, well, there are not too many people that are greedy. It's not like, most people in the junior space, do you really think they think about value a lot? Or what the odds of something is? No, they buy if they feel greedy, and they sell if they are fearful. They buy if they think they're going to make money in the short term. They sell if they don't think they're going to make money in the short term. But one can translate that to, okay, what chance of success is priced in. But I wouldn't, if somebody said, and I've had some people ask me, hey, could you teach me how to invest in stock? It's like, and this sometimes comes from people that have absolutely no idea. People who look at the stock price and by default think that a 10-cent stock is cheaper than a $1 stock. So if that's the basis, it's like, don't even do it. Don't even do it. Yes, if you beat this sector, because it's the most volatile, you can make a lot of money. But that's a big if. It took me 5 years to appreciate, maybe 5 years, to appreciate just how much sentiment plays. Basically how much is simply down to short-term sentiment or, current sentiment, short-term expectations. I used to think that if a stock went down, something was wrong. If it went up in value. Somewhere along those lines. So no, it's just it's like, again, I've been doing this kind of full time since 2015, and I still think I have a lot to learn. Imagine someone who starts off with. And my biggest advantage, in my opinion, is my poker background. That's why I thought I could beat this beat the market to begin, because I thought that was probably a very good experience and background to have, which I think is my main edge, and has been my main edge, because I still think in those expected value terms and all that. But I didn't start off really good. I got better and better and better. So I think I'm getting better every year, actually. And again, that's like 9 years and you're still getting better, even though it's kind of your full-time job. I think about stocks and investing all the time. Imagine how long it would take to teach someone who had no real interest per se, just wanted to make money, no idea about the stock market, and you're gonna try to get them to beat the most volatile, irrational sector around. I don't know how long I would need for that to happen. So I would not advise people if they would really need to want to beat it. I think it goes back to, it's like I do some self-reflection now and then. It's like, I'm not a materialistic guy, really. I said this before. I have a watch I bought in Japan. I'm looking at it now. I think it costs like $300. I see people with a lot less money than me that have watches that cost, I don't know, 40 times what this cost, at least 30 times. My lifestyle hasn't really changed that much from when I basically was broke. I don't necessarily do this for the money. I played poker for the money because I was broke and I had to get money. And then I invested. And back then I was like, what can it be, like 8 years ago, maybe 9? It's like, I thought if I had, and I'm serious, if I had 5k USD, let's say, in my bank account, I thought I was, not set, but it's like, that was a lot of money for me. And now I have considerably more, but I don't do much with it. Again, my lifestyle hasn't really changed. The costliest thing I bought probably was my computer, 8 months ago or something. So obviously I'm not really driven by the money. I'm driven by the game. I want to beat the market. I want to prove to myself, I guess, that I can beat the market, and that's why it's a bit boring for me lately, actually, because when I figured out, again, this took maybe 5-6 years, when I figured out just how much sentiment plays a part and how dumb the market really is in the short to medium term, then it's like you found the Holy Grail. So now I have no respect for the market at all. So I think it's no big puzzle to solve. It's just down to sentiment. I mean, literally, a lot of movements can just be simply explained by some psychological factor, and then it's not that fun anymore, because then it feels like it's not even a hard game in a sense. You just have to appreciate how dumb it is and have patience. But patience is actually super hard. So I guess that's probably never gonna go away. But yeah, I don't know. I think it goes back again to just like, if you're only in it for the money, that's like, oh, I want to get rich, and you don't enjoy, it's like the laying the puzzle, thinking about risk reward, kinda, I'm not gonna say enjoy the volatility, but it's like you understand that volatility should be used and you should not be abused by it. That volatility means that someone is probably making a mistake in some way, shape or form. Unless you really love this in a sense, or love the problem solving aspect, I think it's hard to really get good at it, because I know people that, if they play around in the stock market, they might, set off 10% of their net worth or something, or their bank account for stocks. That's their risk appetite they have. I'm 99% all in juniors, and I've been that for 9 years. If I thought of that, or if I thought about that in its, appreciated the monetary value of that, I would probably go insane. If I thought like, oh, I lost, a car today, I lost whatever. Even, even in punts today, I might have, in dollar terms, I might have a position in a punt, in a high risk, high reward unit, where I'm like, I'm probably gonna lose 60% in this. That might be bigger than my total portfolio was like 7-8 years ago. Obviously back then, if I did that back then, it's like there's no way I would, bet everything I had on a punt, or it would feel very weird. But it's the same monetary value. It's just obviously relative to the portfolio size is not as much. But it's like, that's, I think, a trick as well, that I don't really think about it as money. I think of I don't think of making money. I just want to have a better scorecard. The money, and this is a cliche maybe, but it's like, the money is just to keep track of how well I'm playing the game. When I got my first, million in Swedish kroner, for example, I didn't celebrate that. In hindsight, I thought maybe it's like that was pretty weird, because I remember for most of my life, it's like just the idea of getting 1 million Swedish SEK, or having that as a net worth, that felt super surreal. Again, I mean, just 8-9 years ago, I thought 5k USD, which is 50,000 SEK, I thought that was like, whoa. So I mean, for better or for worse, that didn't really, I mean, I didn't really celebrate that. And I think it goes back to, it's like, I don't, to me, not really, I don't know, thinking of it as money, or appreciating the value of money. To me, it was just, okay, I reached 1 million, doesn't change anything really. Well, in one sense it changed a lot, but at the same time not really, because I didn't really do anything. I mean, it's not like, oh, now my life is completely different because I had 100k USD. So and that's why I kind of think that I'm a bit wacky in that sense. I think you kind of have to be, maybe, because again, if I thought about the money I invest, or the positions I have, as like, if I appreciate it in monetary terms, the pressure would probably be too high. So I mean, I don't know anyone that has my kind of appetite for risk. Given, let's put it like this: I don't know anyone that's 99% invested and have been for 9 years straight. And if they have a big position in stocks, they're probably not in the junior mining space, at least. So, I mean, I don't know. Yeah, I mean, obviously, I guess I'm trying to say you kind of have to be wired in a way. I don't expect people to, let's say, do exactly what I do, because that's gonna, I mean, most people, there's no way they can do that. And at the same time, I know that, and that's why I would never urge anyone to try to do what I do, because I think you have to really be wired like I am, especially to play it the way I do it. I mean, a lot of people can if they put 5% of their portfolio in juniors or 10% or want to do that, I mean, that's not a bad thing. But I'm trying to, I don't know, prove something, I guess, maybe. Because I really don't. When I do something, I pretty much go all in. Otherwise, I don't really want to do it. And you know, when I play the occasional video game or PC game, I hate, for example, or typically hate single player games where it's like I already know I'm gonna beat it. You know, you can read it on I think you can read it on a title or whatever, or, you know, back of a game case, and it says, you know, playthrough time 4 hours, meaning that everybody's gonna beat this game. It's gonna take around 4 hours, so it's more of a story than anything. That to me is super boring. So I mean, the games I play, the ones I enjoy, I typically have the, you know, difficulty set to extreme or insane. It's like I play a bit of Helldivers recently. There's 9 difficulties. Last one is Helldive. That's the only one I play. That's the only thing I enjoy. I don't mind. It's like some RTS games, for example, when I play against the computers, like I might lose 9 times in a row on a particular map. But that's, to me, is fun. When I know I won the map, then it's not fun anymore. Then I might just restart the game, not even playing through it. It's the problem solving and the challenge that is fun. So that's what kinda, I think, has made that, you know, junior investing a bit, or in mining space, has become a bit stale or boring, because when you figure out how much is simply down to sentiment, and the only thing you not the only thing you have to do, but it's like just knowing that, in this case, like, no, this is the market being the market. It's a downtrend, that's enough for people to keep selling. When you figure out, it's like, that's literally how stupid it can be. It's just that it's been a downtrend, and that's the reason for there not being an uptrend, if you know what I mean. Then it's like, I mean, it's embarrassing for capitalism. But when you figure out that, it's like when you just cut through all the bullshit that Mr. Market throws at you, and you appreciate it, it's like, there's a simple explanation for that. I mean, there's going to be tons of people in the forums and on Twitter, on any stock or market or whatever, try to explain every movement, you know. Oh, this is because people are worried about yada, yada, yada. In reality, well, it's like, oh, that's already priced in. But it's an excuse that people give to just do what they want to do, which is sell because it's a downtrend. Then it's like, I mean, yeah, then it's like, how hard is it in that case? I'm not saying it's super easy to buy a downtrend if you think something is cheaper, especially if you look wrong for a year. That's the hard part. But when you accept the fact that this is how dumb the market can be, that it's most of the time it's just a momentum trading, that's momentum trading that's taking place, and it can literally be dumb for like a year. Then it's like, well, it doesn't. I don't require much to beat it in that case. I have to have some common sense and be able to figure out what approximate a range of value is. And if I just buy when it's getting cheaper because it's in a downtrend, and people just sell because it's in a downtrend, then it starts to feel ridiculous. Like, why am I even, you know, I mean, where's the difficulty once you kind of figure out how dumb this market is? And it's pure chaos. And it's like, oh, I've looked stupid for a year. But you can, but if you can accept, like, no, it's not me being stupid. It's the market doing what the market does. So it's not like it's stupid for a day. it just gets increasingly more stupid over a year. So it's getting easier and easier and easier as a value investor. Then the question is, how hard is it really? The hard part is to stick it out and actually constantly have the idea of like, no, value is one thing, price is another. Value is one thing, price is another. And not be like, a lot of people, it's like they see price went up and they're like, oh, it's too expensive to buy now, I want to buy it cheaper. Oh yeah? Did they buy here? Of course they didn't. Of course they didn't. That's one of the most ironic things. The same people that don't buy anywhere near the lows, they're the ones that sometimes won't buy even, let's say a store gets better, price goes up, because then they want to go back in time and buy it cheaper, because now price has gone up. So again, obviously, okay, what's that going to translate to reality? What they're saying is price went up, so I'm not going to buy it, let's say, because it's getting more expensive. Well, if they were true to that idea, they would have at least bought it when it went down, right? Because that's the opposite. If this is if a stock going up is by default getting more expensive and you don't want to buy, if the stock is going down, by the same token, it should become cheaper. So you should be buying, and buying even more the cheaper it got. But they never do that, which proves my point. The market is a total whack job. And we come up with most people come up with a bunch of weird excuses for what they feel like doing. I don't want to buy this, looks too risky to me. I'm not going to buy this because price has gone up. I mean, I kind of rest my case. Anyway, as usual, long rant, but I guess the key takeaway is that you kind of have to enjoy the grind, enjoy the struggle, enjoy calling Mr. Markets bullshit all the time, and accept the fact that if, for example, in this case, if you think, well, when price was in this range and you think the value range is up here, and let's say it has been for, this is assuming nothing changed in terms of value, look how long of a time it actually diverged from value. So even if you were buying these lows, averaging down, which few were, let's say, because I mean, I think Magna is still cheap and I think it's going to go higher. When we're up here, every single buy here would look really smart. I'm not going to jinx it, if when we are up here or higher, every single buy down here is going to look really smart. But that might take a year for every single buy here to look smart. So the lag of a good buy and actual profits might be months or years. And that's very hard. That is very hard. Meaning that, let's say a stock you're buying now, and you think, wow, this is cheap, this is cheap. It goes nowhere for months, or it actually goes down for months ahead. It's like, there is no evidence given to you by Mr. Market that your buy was slightly good. Because the share price isn't patting you on the back. Fast forward maybe a year, you might be up hundreds of %. That's the thing. We never know if we're right on the value and we're right on the price to value gap. We have absolutely no control of when we're going to look smart, when the payoff is going to come. That is frustrating. But again, it goes with you cannot have a great buying opportunity and a future multi-bagger if it doesn't start off cheap. So that's just how it is. The frustration, yes, we can bitch, and a lot of people bitch about they own something they think is cheap, and it's like, maybe it goes down. Well, that's an opportunity to buy more. It's like, I think I made this point with Magna. It's like this downtrend here, in the end, in 2 years, might have been the best thing that could ever have happened. I mean, we don't know. There might be dilution, all of that. Maybe they do an acquisition, yada yada. And in a sense, it would have been better to maybe go like that. But still, even with dilution, and it's like, okay, instead of going wherever here, it ends up going there, for example, if you factor in, let's say, additional dilution. Still, if the share price went like that, yes, then the opportunity, the best opportunity or the highest future return was from here. But if the share price went like this and up here, with added dilution, so instead of if it just kept on running, maybe the share price would be up here in the future, but with dilution here, that's still higher future returns. People could have made more money in Magna thanks to this correction, which goes back to volatility and the sentiment swings, meaning hot sector, cold sector, is by definition not, or is by default not good or bad. It's what we do. If Magna goes like, goes like this, one could, I mean, that would obviously be, good returns. I mean, I think it can go a lot higher than that, but still, my point is that in hindsight, then all of a sudden, people would want to go back in time to this period and buy more. I think I might cut the video here. Maybe this was a big old rant. I think I'm gonna cut it here. Actually, I have some stocks to go through and other stuff, but or maybe I won't. You won't know if I won't upload this, but maybe it's just a lot of rants or ramblings. Anyway, if I talked about any stocks, I'm biased. Magna, for example, I own a lot of Magna. It's a banner sponsor. Twice biased. Not investing advice. Bye bye.